Welcome to the Course One podcast. In this podcast, we explore the emerging open financial system. We dive into scalability, interoperability, proof-of-stake, blockchains, and many other parts of this coming financial singularity. Tune in every Monday to dive deep into these cutting-edge projects and protocols with Course One team members and guests.
Hi, and welcome to this episode of the Course One podcast. Today, me and Meher are joined by Mark and Kent, working on an interesting project called Microtick. Welcome, Mark and Kent.
Thanks, Felix. Thanks for having us here.
Thanks.
Yeah, to start off, maybe first of all, let's go a bit into your background. So Microtick is a project built under the umbrella of ShapeShift. So maybe why don't we start with kind of explaining how you got into building together?
Do you want me to start with that, Kent?
Yeah, go ahead, Mark.
Okay. Yeah, Microtick as a project dates back to early 2000s, specifically around 2004. The idea back then, obviously, was pre-blockchain. It was originally conceived as a way of standardizing option markets so that we could liquid or trade options in a liquid fashion on very short-term markets, things well below a day, sometimes below an hour, 15 minutes, even down to 5 minutes. And as part of that technology, we generated what we called an implied underlying price. And that's a price that's derived through analysis of the prices on the market. We can actually get an implied price of the underlying. And with the advent of blockchain technology, Bitcoin came along, Ethereum, we realized that it would be an ideal way to build an oracle, because one of the problems as we know with the blockchain space is getting prices onto the chain. And so we pivoted the project and started building on Ethereum and had a proof of concept market back in 2015, 2016 timeframe. And at that point, we came in contact with ShapeShift, and the rest, as the project evolved, ShapeShift at the time was running a project called Prism, and that needed an Oracle, and Oracle costs were kind of cost prohibiting at that time. So the synergies of the two projects kind of lined up, and so we just started working together, and that brings us to where we're at now. And obviously Kent got involved, and I'll let you pick up there.
Yeah, so my own journey up to this point, I got into crypto in 2012. I wrote an album, and somebody suggested I sell the album for Bitcoin. I thought, well, isn't that kind of a scam? Did it get hacked? But then I started learning about Bitcoin and started selling some albums. Back then, Bitcoin was pretty low in price, and it started to go up. And I thought, oh, this is kind of cool. I'm making a little bit of money on my music. But then I fully went down the rabbit hole and started to get into crypto. A few years later, when Ethereum was becoming a thing, I started the Ethereum community here in Denver and started hosting a lot of events around this novel technology, and really saw this critical mass of developers start to build. And that was a pretty cool experience just to be there in these early days. The Cosmos ecosystem reminds me a lot of that, incidentally, kind of just this really fun sort of vibe. Everybody's collaborating and building on this new technology. Ethereum Denver sort of eventually spawned the ETH Denver Hackathon, which is put on by a few super talented guys here in Denver. And then late 2016, I decided it was finally time to start pivoting into blockchain technology full-time. ShapeShift turned out to be a natural fit since I'm here in Denver, and ShapeShift is as well. So I started ShapeShift in early 2017, just prior to the crazy ICO bubble, and then pivoted into my current role as head of R&D at ShapeShift. Kind of one of the things we aim to do in the R&D department is really de-risk different elements of new technology. Mark mentioned Prism. That's a good example. With Prism, it's a very cool, fully or pretty decentralized technology on the Ethereum main chain, and it was a lot of fun. People liked it, decentralized asset management, but it had some flaws in terms of scalability. When CryptoKitties happened, it really impacted user experience and became a big cost center for us. And also, de-risking elements like the regulatory stuff and building out a scalable tech roadmap. So we aim to incorporate those lessons into R&D, and especially with respect to Microtick. So I've been collaborating with Mark on this over the past 1+ years, and it's gotten to the point where now we're kind of bringing it to the public a little bit, and it's been a lot of fun.
Yes. Oh yeah. Yeah.
So it's interesting. The ShapeShift was building Prism, needing an Oracle, found Microtick, which naturally functions as a decentralized price Oracle, and then ShapeShift had to close down Prism, and now Microtick. It turns out that in the process of building Prism, you found Microtick, and now Microtick has become the bigger focus inside.
Yeah, Prism has been sort of indefinitely backburnered. It's not an active project. It's been sort of deprecated. The core of the idea we think is very powerful, and it's something that we might revisit in the future. It got a lot of positive feedback from users, and it really is a good fit with what we're trying to do. And especially given current progress on scaling, it's something that we could revisit. But what's cool is, like, as we'll explore maybe as we dig into the tech here, there's even some elements with Microtik that could be complementary to Prism. So it's something that we don't actively think about every day, but something that's sort of in the back of our heads is like, we could kind of bring this back at some point.
And just to be clear, I mean, Microtik right now is an R&D project. We're mostly focused on de-risking aspects of the technology. It's currently to be determined how or if it will be used in the future. So it's very much considered as an R&D project within ShapeShift. It's not a large development focus at this point or anything.
Okay, yeah, so that's the perfect segue, right? You were earlier talking already about the options market and de-risking. So maybe let's start getting into Microtik and what is Microtik at a high level.
Great. Yeah, there's a little bit to unpack here. So I find that it's easiest to break it out into sort of three core components of what Microtik is. At the highest level, it's like a decentralized, trustless, or at least what we aim to be trustless, price discovery mechanism. That's kind of a loaded term, but we'll get into that. It's also a marketplace for trading short-term options, a very, very short-term basis. We're talking like 5 minutes, 10 minutes, 1 hour, 12 hours. That's what gives rise to the name Microtik. You're able to profit potentially from very short-term movements on a very short time frame. And then this marketplace, this trading between actors gives rise to what we want to create as a decentralized Oracle whose price feed can be disseminated across the Cosmos ecosystem via IBC, and of course, eventually, other blockchains like Ethereum as well.
So one of the interesting things about Microtik is, like you mentioned, it was a decentralized price discovery mechanism. Normally, when we think of an Oracle, the conception we might have is that there is some set of, like either validators or servers that are reporting prices from some other place. So the typical Oracle, like places like Maker, Terra, Use would have a set of parties. They might be validators or some other parties that are fetching data from, let's say, Binance or Coinbase and then feeding them into the Ethereum system. Microtik is not such a reporting system, right? It's something beyond just a reporting price Oracle.
That's correct. So the way to think about the way Microtik works is it's based on the concept of Schelling points. And so we have game theoretic rules built into the marketplace such that it pays to be closer to the consensus, and you're penalized a little bit for being outside of the consensus. And by doing that, we create a dynamic where quotes can be, and by quotes, I mean the prices that are submitted by independent observers that are contributing these prices to the marketplace. They're curated by their proximity to each other. And therefore, the outliers are discounted in terms of the price they might receive on the market. And the ones closer to consensus are given a little bit of a reward. And by doing that, we have a mechanism such that over time it should be able to achieve a stable reference price that resembles the real world price. And that's what we're trying to test with our testnet right now.
One thing to add there in terms of Schelling points, this is a theoretical concept that's been around for a while, but with the advent of crypto economics and blockchains, we've had a chance to test this. It's not a completely untested theory. Of course, we have a stablecoin like Terra that's achieved this somewhat. And then my favorite example of Schelling points in action is Augur. Augur has settled, I believe, thousands of markets over the past several months. And for the most part, they've been able to use this concept pretty effectively. It's important to note that Mikrotik itself is not a prediction market. There's maybe some rough similarities, especially with respect to these Schelling points. That's not what we're aiming to do. But the fact that projects like Augur are using this concept successfully makes us pretty optimistic that it can be effective in this context as well.
And specifically, a prediction market uses binary options, where we're using actually a linear payout based on the risk profile of when you enter the trade. We can get into that in a little more detail, but option prices are based on the current spot, not any forward-looking spot.
So the basic idea here is that there's essentially like two kinds of players. One is a market maker, and the second is a trader. And so market makers are these parties that are incentivized to put in price estimates for things. So if you're talking about, for example, Microsoft to US dollars, there's a bunch of market makers that are continuously putting their quotes on what's the price for Microsoft to US dollar. And then there's a group of traders that can trade with these market makers. And as you mentioned, Mark, the game is somehow designed that market makers, so there's some kind of average price that the market makers have put in, and market makers that are close to the consensus are rewarded, and that are far away from the consensus are penalized. And that is how an incentive exists for all of these market makers to converge to some kind of consensus price for market.
That's correct. And by doing that, we don't have to worry about any reputation-based curation. We can base it solely on how much token backing that they're willing to put behind a quote, combined with the accuracy that they consider their quote to be valid within. As an example, if you're looking at the price of Microsoft USD, as you mentioned, there's a volatility associated with that over time periods. And the tighter they can make their volatility estimate and consider that just a range. So if you specify the price of Microsoft, I don't know what it actually is, but suppose you say it's plus or minus $1. If your quote is accurate within that time window, you have specified a certain accuracy for that quote, and that receives a certain weight on the Microtik marketplace. If the market maker were to narrow that window down to say plus or minus 50 cents, that quote would receive more weight on the Mikrotik marketplace than it would have if it had the larger time window. And so we can actually weight these quotes not only by token backing, but by how narrow that window, or how narrow they can make that window on the market.
And sort of tying in the Schelling point concept back in here, there's an important property of the mechanics that Mark just described. And that's the fact that, not only are market makers incentivized to provide correct assertions about what an asset, what its price is, or really like any real world condition. We can get into that as well. It's not just, the price of ETH or something. They're incentivized to do this. However, if they provide incorrect assertions, traders have the ability to profit from that inaccuracy. Imagine if ETH is, say, it appears to be at 143 on the major exchanges, and a market maker says it's at 144. A trader can come in there and, expecting that the Mikrotik's price will drop, can buy a put. But by doing so, by buying that put, that will help actually correct or move the consensus price in Mikrotik closer to what the real world is doing. So there's sort of this elegant feedback mechanism in there, or self-correcting mechanism, that we think will give rise to a more accurate price feed.
And that's actually a benefit, to sound off on that even, is that we can actually do this block by block. So we don't have any latency. We can actually generate a real-time price feed block by block as it happens. And on Tendermint Cosmos, which is what we're on right now, the block time is between 5 and 6 seconds. And so we have a price that's reasonably accurate as long as you have a majority of honest market makers, and the price action should reflect prices to within that time window.
Yeah, so I guess the interesting thing is the piece which is that the majority of honest market makers are honest. So could you talk about like the game theory assumption behind Microtick and conditions in which it might hold true and in conditions in which it might not?
It's a good question, and one of the things on the testnet that we're trying to address is to find the parameters where those assumptions are valid and identify where they may be lacking. Obviously, on a blockchain, you have certain any type of proof of stake blockchain requires that a majority of participants are honest. I mean, if they're not, the entire assumption of running on a blockchain kind of breaks down. And so, assuming that we have somewhere in the realm of 50% to 2/3 majority of honest market makers, we think that our game theoretic rules are going to play out. And we're starting to test that on the chain. One of the interesting pieces of Microtick is the weights of all these quotes are additive. And so as market makers enter quotes for various time durations, and as the system assigns them a weight, we can sum those weights and get an overall weight to the entire market. And what that does, because of the way that the game theoretic mechanisms are designed, is it gives you a simple formula where you can actually identify how much the market can be moved given a certain amount of token backing. And that's due to some of the math behind the scenes, and we can go into that later if we want to. But on the site, if you actually go to the testnet, there's a little widget, and it says, with this many tokens, you can move the market this much. And so anybody relying on that price number has an actual real-time way of identifying their risk for price movement based on the amount of tokens they think an attacker might be willing to yield.
Okay, yeah, and now we already talked a bit about how Microtick works, and we already also mentioned the decentralized Oracle feature. But now that you're saying people can come to the site and see how much they could move the price, who would be these people that take a look at that, or what kind of users would engage with Microtick?
So initially, one of the advantages with Microtick is it offers a free price feed to the ecosystem. And so if you're writing a dApp, if you're a developer and you want to find a free or a cheap price oracle, free is a pretty good price. And so we think that we're going to have people that are going to want to use the price. And then the next question is, how do you address risk? Because obviously you're not basing this on a trusted source out in the wild. We're trying to build a decentralized Oracle here. We need some sort of a measure of riskiness of a position. And so that's up to the market participants on the dApp. I mean, you might have a dApp where traders are doing something like a Prism used to do, where they take opposing sides based on expected price movement. And the various counterparties, one may want to see it go up, the other may want to see it go down. And they are equally able to enter the market and put in their quotes. Now, part of the game theoretic assumption is that a market maker, in order to make money, has to have an accurate price on the market. Because if it's not accurate, no one's going to want to jump in and take the opposing side because they know it's being manipulated. So assuming that a majority of market makers will put something in close to the correct price, eventually you reach a critical mass as these dApp users come in and they want to join the market too, because they want to stabilize the price just as well as everybody else. And so the combination of all those participants on the market will tend to stabilize the price, is the theory. And that's what we're trying to test out.
So one kind of users are dApps that require a price oracle. what are some of other user groups that might benefit from Microtick?
So just to explore the DApp side a little bit further, they're obviously they're in a position to use the Microtick price feed. That price feed has a few fundamental differentiators, we think, versus other oracles. One is the fact that it's cost. There is no cost associated with tapping into that data feed. The reason is that the price for essentially maintaining or arriving at that consensus, or the cost associated with that, is borne by the market participants. So ultimately you have this end product of Microtick, which is the consensus price. The participants have given rise to that, but then you can, as a DApp user, you can tap into that. Also, you actually have the ability to hedge the price feed as a user as a DApp user or a DApp developer, and this would we suspect can help the devs manage risk. Of course, there's no guarantee that Microtick will be the accurate thing. But you can manage risk on an ongoing basis. So not only are they users of the data, but DApp developers also potentially will be participants in the Microtick marketplace themselves. On the trader side, you have people that want to speculate on a short-term basis. For example, maybe you've seen that, say Bitcoin has just broken a crucial support level, and it's really going to drop here over the next 4 hours. We do this a lot internally, just doing our own testing with various success, but that's that's why it's speculating. Alternatively, there's also just hedging on a short-term basis. We think there's a lot of use cases for that. For example, if you want to effectively lock in or guarantee a price for something, you don't want to be exposed to price risk over a short-term basis, you can do that. And then in terms of market makers, this is something that we're excited to see. We have our own hunch about what likely market makers are. At the small scale, it could be something as simple as somebody that writes a simple bot that aggregates prices across major exchanges and is just trying to experiment with premiums and expected volatility and derive profits that way. As you scale up, potentially even like crypto hedge funds and market makers with substantially more money might be logical participants in this platform.
Yeah. So one of the I think crazy aspects to me, like crazy good aspects of Microtick, is that this is like a marketplace without any underlying, which means that a Microtick marketplace can exist for example, something like a pharmaceutical company shares. And the pharmaceutical company might be conservative and never want to touch a blockchain. Yet you can build a marketplace in which people can trade options on the price of the shares of this pharmaceutical company, as well as derive the price of the shares of the pharmaceutical company.
That's correct. That's what I was kind of alluding to at the beginning of, part of what makes Microtick unique is it doesn't have to be, since the underlying is decoupled from the asset or the market that's being traded. There's this could allow you to create all sorts of markets. Your Microsoft or pharmaceutical example is spot on. And we like to talk about even any real world condition that can be expressed as a price could be a Microtick market. So one of the more a little bit sci-fi right now, but we think is totally plausible and effective is something like, what is the average price of commercial real estate in New York? Something that maybe there might be some data points, but it certainly isn't updated on a real-time basis. There isn't that economic incentive for actors to make assertions. It might be opaque. It might be difficult to tap into a feed like that. But with Microtick, you have the ability to create price feeds for things that don't really exist. And we think that could be really advantageous for a lot of participants in the future.
That's very interesting. So anything that can be expressed as a price can find a market and valuation via Microtick. So
in theory, correct.
Yeah. So, for example, could a painting be valued by Microtik? Like, could the Mona Lisa be valued by Microtik?
Potentially, yes. Things like NFTs, non-fungible tokens, could achieve a price discovery, because what we're doing is decoupling the price discovery from the trading. And that means you can run a market on the price of something separate from actually trading on anything related to the underlying. And that gives you some advantages. And above and beyond just the types of things we can price, it also allows us to disrupt one of the major forces that centralize markets today, which is the fact that to have liquid price discovery on traditional order book markets requires some sort of a centralized mechanism for doing the trade matching. And if we can decouple the price discovery from the trade execution, we've broken that tie. And it's a great way to bring a decentralized trading mechanism into the space. And that allows you a more private trades, because they're going to be over the counter, and possibly in some jurisdictions a little bit less subject to regulation.
Interesting. So I guess like one of the places where I'm interested in is like you have certain events that are happening on the blockchain itself, right? So for example, gas prices. Now there's a way maybe Mikrotik can predict gas prices for the next certain hours, and as a dApp developer, I could hedge my gas price risk. So if I think a CryptoKitty like application is going to come and disrupt my dApp, I could buy some sort of call options on Microtik, and if the gas prices go up, I'll make a profit on Microtik to compensate me for the impairment of the dApp. And similar things could be said about sort of mining capacity. They could be said about like the risk of validators in some way. So anything that can be expressed as a price can be basically valued by these market makers. Each market maker puts a quote in, and then there's an average or consensus price from these market makers, and these market makers have an incentive to be close to consensus rather than far away. If they're far away from consensus, traders can make money trading against them. Yeah.
And so the key there is you need to have a critical mass of people willing to put price input into the market. And that brings up an interesting point, is because on an order book market, in order to participate in price discovery, you have to be putting up a transaction on the actual underlying, meaning you either have to be interested in buying or interested in selling the asset. On something like a Microtick, anybody can contribute to that price. And because it's curated based solely on the token backing they're willing to put behind the quote, we can decentralize it and make it a little bit more fair for anyone to participate. For example, with the Mona Lisa example you gave, the painting may not trade more than once a decade, but yet the price market could be sensitive to things like, just news events or things that might theoretically affect the price could introduce volatility into that over a short time frame that we could actually take part in price discovery in a real-time fashion.
So I'm curious. So you mentioned earlier in the call that Microtik is a research project and it's in the phase of being de-risked inside ShapeShift. But if you were to launch this project, what would be your go-to-market strategy? What would you focus on first? Where's the biggest win?
That's a good question. So to kind of get there, one thing worth looking at initially is just, like part of the answer to your question is what are the answers to the questions that we're currently trying to answer or address in ShapeShift, mainly de-risking things like on the regulatory front. This is a big challenge that we're being very proactive about looking at. In a perfect world, we could just launch all these crazy far out DeFi type projects and, experiment, and there wouldn't be these layers of regulatory regimes that we have to look at across different regions. The fact is, we have to be very mindful of that And that's another, lesson we've really incorporated and taken to heart. So we have an incredible legal team at ShapeShift that's helping us look at questions like that. Anecdotally, it seems like compared to a few years ago, when we talk to outside counsel about things like this, about can we using these novel technologies, there's more and more lawyers out there that really seem to get crypto and blockchain technology. This is encouraging because before it was kind of like trying to explain these deep concepts to people that only had a very fundamental or a very kind of simplistic understanding. But that's changed a lot. So that's gotten better at least. But we don't really have any ability to shape discourse on the regulatory front. But we're actively looking at different areas where we can launch and really being very careful about it. So to kind of wind up to your or address your question about what would be next is, once we find an area or areas where we can open this, and the next step is to get a critical mass of participants, like Mark was talking about. What constitutes critical mass? That's hard to quantify. There is no easy answer to that or a single answer. But we think with a broad range of participants, especially market makers providing liquidity in the market, and then of course taking it back to the Cosmos, the on-chain stuff, having a Byzantine fault-tolerant, nice, secure validator set will be a crucial step. So the tech has come along very, it's really been a nice gradual process. Mark's been, iterating on this for quite a while. And our next step in terms of that, broadly speaking, is IBC. So it's a bit of a moving target because IBC is, of course, required to disseminate this price feed. So we'll be playing around with, that or testing IBC. We're looking forward to Game of Zones as well. So really kind of looking at those three aspects, regulatory, tech, and of course on the business front. That'll kind of inform our next steps. But really getting more participants involved in the testnet and being able to further test out some of these game theoretical assumptions is kind of one of the next steps we're looking at.
Yeah, while we're talking about that, maybe you want to tell us a bit about the current state of the testnet and how many participants are there and where people can find it and how they can engage with it.
So currently there's just a handful of participants. We're just getting started. The testnet's been up for a month or two in an active format, but anybody can go to the website. On the top, there's a link that says try the testnet. They can pull up a GUI. It's best viewed in Chrome at this point. We don't have very good cross-browser support yet. But assuming you're on Chrome and want to try it out, just jump on there. It'll generate a Cosmos address for you. And if you go onto our Telegram channel and just post your address, we'll send you some test tokens, and that'll allow people to jump in and participate.
And so I guess I have two final questions. So the first question is, Kent, you mentioned that ShapeShift is focusing on the regulatory dimension. Now, on Epicenter, we interviewed Eric, and I know why, because of the history of ShapeShift's early product and how regulators ended up changing the face of the product. For Mikrotik, I'm curious about what are the big regulatory questions around such an options market?
A lot of it has to do with the fact that are these arguably derivatives? We have our own thoughts in terms of, well, you could say they're index options and perhaps they're not. So some of the nuances falls outside way outside our area of expertise in terms of, if you sit a bunch of attorneys down and regulators, what might they say? But that's one of the main things is like, okay, you have this thing, and are these options technically? It's hard to say. But on the other hand, you also have this element, and we think this is very important to underscore. You have the decentralization element as well, where this is a permissionless DAC. In the ShapeShift context, we would be offering this to our users, maybe through the platform, perhaps. But at the most fundamental level, Microtick exists as a DApp in the Cosmos ecosystem, or it will. If ETH 2.0, that launches in a good way, then you can also port it over there. But the point is, we've designed it to be maximally decentralized and trustless. So given that, and given its permissionless nature, that could also change the regulatory profile. So that's something that we're very mindful of when we're talking to attorneys.
So what's the next step for Microtick? When would we know whether a mainnet is on the way, and if so, when would it go live?
If we had to put an estimate on it right now, something like, I feel like within 2 quarters, it'll be a lot more further de-risked. At the same time, the fundamental technology that we're building this on, namely IBC, should be much further along. I hesitate to give too firm of an answer, but I think it's realistic that within 2 quarters we'll have a good. I'll be able to answer that question a lot more accurately. Sorry for the ambiguousness.
And the other side is community building. As we get more people involved, people that are understanding the technology and able to develop things like market maker bots or trader bots, and really, generate that grassroots involvement. We'll also have a better mechanism at that point, or a better way to gauge how we want to deploy this.
Oh, there's actually one more thing I wanted to add on about the regulatory stuff is, and this is we think a key distinction is. Even though we would love to launch this to the entire world, given its global nature, it's not necessary, we think, to have that aspect in order to create a good price feed. In other words, if it's only available in a handful of jurisdictions, as long as there's enough, there's that critical mass of participants to give rise to a game theoretically secure price feed. Anybody across the globe, any DApp user, really anybody at all, could tap into that price feed. So global availability for the marketplace is not a precondition for global availability for the price feed. And this makes us more optimistic that regardless of how things shake out on the regulatory front, anybody will be able to access the price feed once things get up and running.
And we feel that this is adding a valuable product to existing brick and mortar financial markets as well, potentially. So maybe there's a incentive for regulators to want to work with this technology, given the benefits that it brings, i.e. the forces that operate against the centralization of markets, and also the ability to go on chain and look at transactions and, identify everything that's happened, which sometimes is opaque on a centralized exchange.
Okay, well, I guess we had just 30 or 35 minutes, and it was great to have you on the show, Mark and Ken. I'm really excited to see Microtick work in the wild. I've already participated in Testnet, but I was almost wishing I could do this with real Bitcoin. So.
It would be nice to hedge positions right now.
Yeah. I wish there was a Microtick market on the probability of Microtick being a mainnet.
You have to use Augur for that.
Yeah, right.
Yeah, that's more of a prediction market.
Okay, but yeah, it was. Thank you for taking out the time to be on the Chorus podcast, and we look forward to the progress of Microtick.
Thanks, guys. Thanks for having us here. Really appreciate it.
Thanks for your time.
Thank you for listening to the Chorus One podcast. Visit chorus.one for more information about our work. Don't forget to subscribe to the podcast to stay tuned on new episodes airing every Monday.